People been hitting me up like crazy asking me, why can I get funded? Can you trade for me? Can you pass my challenge for me? The answer is always going to be no. Sit down, watch these videos, lock in so you can quit that 9 to 5 and feed your family, bro. I'm giving out as much sauce as I can, but if you don't have the mindset to get it done, then you're going to have to stay at that 9 to 5 that you hate and just watch the rest of us make money from the market. What I'm about to show you guys is the secret hack that got me funded. By the way, my course is getting ready to drop soon, the Golden Blueprint. Check it out, pre-save it. I'm only accepting a few people. Hit the like button, subscribe, turn on the bell notification, and let's make this money, y'all. All right, so not knowing which direction the market was going was always a killer for me. I was always losing trades when the market was ranging. What helped me so much was when I realized that price has to break structure or change character or vice versa in order to be able to get me in the markets, have my trades be executed, and then I actually start making profits. So you have to make sure that you're paying close attention on what direction the market is going if you're trying to make money in the market. Okay, here we go. So I drew this out for you guys. Literally, this is a buy version. This is a bullish version. So if price is going up, and this is called a retracement. If it retraces, what you want price to do to know if it's going in an uptrend is it has to break structure. So I'm gonna draw a line right here. It has to break structure, literally right here. This is how you know, okay, price is trying to go up. And so when it breaks structure and it retraces again, you want it to break structure again. Excuse the line for being crooked. You get the point. You want it to break structure. So you want price to be able to do it again. And then how you know, again, if price is still going up, if it breaks structure. What I like to do is have it break structure one time. It doesn't need to be several times, one time. And in my course and my other videos, I talk about liquidity grabs. How do you know if it's really going up? I'll break it down for y'all today. I'll give y'all the tea today. I'm feeling generous today. I'll give y'all the tea. So price, again, is going up. Is retracing. Price breaks structure. It comes down. It breaks structure. It retraces. It breaks structure again. So that's literally all you need to know. And so if price is going up and down like this, you want it to break structure. That's how you know. And so we're going to change a character right now. Let's do it. So if we're doing this, if price goes, let's see, if it goes down, that's a change of character because it broke this structure right here. I hope that makes sense. So price is going up, going down, going up, going down, going up, and it breaks structure this way. That's like, oh, it's going down. And for me, I'll show you guys a clear break of structure. But for me, this is a break of structure. Other people call it a change of character. That's just literally how it goes. And so when it changes character, that's how you know, okay, it stopped going up, it's ready to go down now. Same with a down version. When price is going down like this, when it decides to go up like this, that's how you know it's a change of character because it broke this high right here. So when price is making highs and lows, if it's breaking this right here, that's how you know, okay, change of character, downtrend now. Or, yep, downtrend. And then when it's doing the same thing and it breaks structure right here, you're like, okay, price is going up, uptrend. Super simple. Super, do not overcomplicate it. When I struggled with this for a couple of weeks when I first learned how to trade because I was trying to overcomplicate it. No, you don't use the line chart. You can. I don't. I heard people do it and they're successful with it. I just don't do it. So let's go into the market and let's see what we can catch. So this is what really helps. And I'm gonna give you something else that really helps. But this is just to get your feet wet and understand. So if price is up right here, right? If price breaks this with a body close, that's how you know that it's going to be a new break of structure or what they call a change of character. If price is right here and it closes down, that is a new break of structure and it's showing you price is going down. And so this is what I typically do to know if price is going up or down. And then I'm going to give y'all the sauce after. When a candle closes below. So if you have this bottom right here and the candle closes below, That's how you know. And so the same thing right here. You got this high. You don't want it to break this high unless you're ready for it to go up. But as of right now, we're in a downtrend. And so you got this low right here. Price made this low right here. And what happened was the candle right here closed. And so that shows you it's still in a downtrend. And so I'm going to give y'all the difference between a liquidity grab and actually, before I get into the liquidity grab, I'm going to give y'all the tea on what I typically do that can alleviate extra stress. So with my indicator, right, I put on my EMA. The EMA helps me understand what direction the market is going. And so I do the 20 EMA right here. And that's just how I do it. And so if price is if the EMA, right, is in the middle of price, you don't trade it. That means it's ranging. It's going up and down. Like I said earlier, that's why I caught most of my losses. If it's in the middle right here, that's why I caught most of my losses. But this is good right here, this big push right here, because the EMA is above. So you only take sales when the EMA is above, and you only take buys when the EMA is under. So even for an example right here, like the EMA is under and you have price, it broke this structure right here. And then price also broke structure right here. This will be like a small swing point. So it broke structure right here. So it's just showing you that I'm still ready to go down. And then what happened was price broke structure to the upside over here. The candle closed right here. So it's a little, this is a little advanced, but you'll get it. You'll get it. And so this is the difference between a liquidity grab and an actual market shift, right? So what you can do is say, okay, this is the low right here. The EMA is showing that it wants to go up. And so you're like, okay, boom. We got a quick break of structure right here. And then because this candle closed under, you could think, oh, price is going down. This is about to be a break of structure, but the body did not close, and that's literally a liquidity grab. When the body does not close, that's a liquidity grab. That's the bank saying, I'm gonna take money off of this order block right here. We'll go into that later. We go deep in the course, but I'm hitting this order block right here, and I'm pushing up so that I could be able to, you know what I'm saying, break my structure, make some money. So what ended up happening is it made a high right here. Price retraced, grab liquidity, went up. But that's advanced. But that will get you started in understanding market direction. So whatever strategy that you use, whatever PD array that you use, understand you have to be on the right side of the market. It's going to help you a lot. I hope this helped.